Welcome, day traders. You are watching a recap of the Asian session. Wall Street performed an upward reversal yesterday following the news from Japan. US stock indexes snapped a 4-day losing streak, rising slightly. Australian shares also climbed. Only the Japanese stock market incurred losses. Its main stock index reached a 2-month low on Tuesday. The main reason for such drastic changes was the Bank of Japan's decision to tighten monetary policy. Yesterday, the bank lifted its cap on a 10-year government bond yields from 0.25 to 0.50%, and this increase will allow long-term interest rates to rise even more. The regulator had to adjust its policy amid aggressive tightening by major central banks and soaring inflation. Today's step is aimed at improving market functions. It's therefore not an interest rate hike, Haruhiko Kuroda pointed out. Notably, many analysts believe that the bank could adjust the yield curve. Almost nobody expected it to happen in 2022. This is why the market reaction to this event was so sharp. This move also caught investors off guard, as officials had said many times that they wouldn't change monetary policy parameters. Kuroda used to surprise market players with such sudden moves. However, in recent years, he did it quite rarely. Even at the press conference yesterday, he was trying to lower market expectations for further policy changes. He also mentioned that this step will take it out of necessity. So there is no need to expand the yield range further. However, traders seem to take his statements with a pinch of salt. Besides, Kuroda's term ends in April next year. Perhaps this is a reason why the regulator has started slowly but surely to adjust policy. Haruhiko Kuroda might be trying to gradually move away from a dovish stance and pave the way for its normalization. Before bowing out, Kuroda will surely leave his successor room for maneuver. The time for this decision has also been chosen on purpose. The Christmas and the New Year holiday are ahead. Traders will go on vacation, so attention to Japanese government bond movements will be low. And the Bank of Japan's decision also affected Forex. The US dollar shed 0.6% versus the strong yen. The greenback was unable to recover even amid growing US Treasury yields. In the Asian session today, US government bonds were also up. However, it did not help the US dollar rebound. It was consolidating near 103.95 against its main rivals. Another bearish factor is recession fears. Earlier, the US dollar appreciated amid expectations of a monetary tightening, and now the situation is quite the opposite. The Fed's commitment to curb inflation at the expense of economic expansion may lead to a downturn next year. This is why the appeal of the greenback as a safe haven asset has been undermined. It slid into the downward price corridor of 103.90 and 104.20, moving away from its previous highs. At the same time, the yen keeps growing. In the Asian session, it was hovering near 4 months high. After rising against the US dollar by almost 4% in the early morning, it was trading at 131.8. Yesterday, the dollar-yen pair broke through a low of 132 and advanced to 130.59. It closed the trading day at the level of 131.69. The yen is likely to add more gains as investors are still factoring in the Bank of Japan's move and the Japanese government bond yields are growing. So the pair was moving in the range of 131.50 and 132.40. Traders are likely to have already locked in profits from closing long positions. It will take some time for analysts to analyze the situation and make accurate forecasts. Meanwhile, the US dollar, which advanced amid rising US bond yields, exerted pressure on commodity currencies. The Australian dollar fell to 0.6675 despite improved risk appetite. However, the Australian dollar was supported by growing oil prices, so the AUD-USD pair was fluctuating in a fairly wide range of 0.6657 and 0.6699. Support levels are now located at 0.6720 and 0.6670. Resistance levels are seen at 0.6815 and 0.6850. As the market volatility increased considerably following the Bank of Japan move, the New Zealand dollar lost momentum. It slid below the important support level of 0.6340. In the Asian session, the NZD-USD pair was trading at 0.6295. Bears pushed the price below the psychologically important level of 0.6300. It was hovering in the intraday range of 0.6287 and 0.6352. After the breakout of the support level, the pair is likely to approach 0.6250 by the end of the year. And that's all for now. Thanks for watching. Subscribe to our channel and keep your finger on the pulse. See you!